Trading is closed. Let's look at the flows. This is Vector Daily. The VIX stands at 16.75, a level indicative of low volatility, maintaining a calm, risk-on environment. Despite the S&P 500 closing down 0.49% at 690.36, the broader market shows resilience with a healthy breadth signal. This suggests a robust rally with widespread participation across sectors. On the macro front, the 10-year Treasury yield at 4.14% continues to climb, hinting at shifting investor sentiment towards sectors with stable cash flows. Meanwhile, Bitcoin remains relatively stable, providing little in the way of market shock. Today's breadth signal remains healthy, indicating broad-based participation in market movements, even as the S&P 500 posts a slight decline. Sector rotation is evident today. The energy sector XLE surged 2.26%, taking the lead, while consumer discretionary XL lagged, falling 0.58%. This shift suggests a move towards defensive and value-oriented plays, likely influenced by rising Treasury yields. Utilities, XLU, and consumer staples XLP also posted modest gains, reflecting a preference for sectors offering stable returns amid higher interest rates. The Magnificent Seven stocks showed notable divergence today. Microsoft, MSFT, and Meta led the declines, down 2.4% and 2.47% respectively, with increased relative volume indicating strong selling pressure. This underperformance compared to the broader market suggests potential profit-taking or reallocation from high-growth tech to sectors poised to benefit from higher interest rates. In terms of individual stock performance, AMD was the top gainer with a 2.79% increase, closing at 223.6, likely benefiting from sector rotation into semiconductors. Conversely, Netflix, NFLX, was the top loser, dropping 2.95% to close at 88.55, potentially impacted by shifts in consumer spending patterns and competitive pressures. Looking ahead, key technical levels for the S&P 500 include a pivot at 689.4. Resistance is lined up at 692.67, while support can be found at 687.09. Investors should remain vigilant, as shifts in macroeconomic indicators and sector rotations could define tomorrow's market landscape. Stay tuned to the evolving dynamics as the market navigates through these interest rate-driven currents.